Hello, friends. Christian Carter with Radius Financial Group. Outstanding news this week. The news actually just came out yesterday. The Fed have decided to cut interest rates, not by the 25 basis points that some people were thinking. They actually cut them by 50 basis points, which is really, really good news. We're going to break down what this means for people that are looking for homes right now, what this means for people that already own homes, and we're going to dive into all that. And quick caveat, I don't know when you're watching this video, but I'm shooting it on September 19th, and then if I get my act together, I'm going to edit it in time and release it on September 20th, 2024. So let's get right into what this Fed rate cut means for potential homeowners and current homeowners. All right, so let's get right into it. First of all, we're going to talk about the effects that this is most likely going to have on the housing market, right? So we're going to talk about three things. First of all, we're going to talk about lower mortgage rates. Then we're going to talk about more buying power. And then finally, any refinancing opportunities, right? So first up on the list, lower mortgage rates. This is most likely going to lead to lower mortgage rates, right? Now, I know what you're thinking. Christian, you just said the Fed cut interest rates by 50 basis points, which of course we all know is a half a percentage. Obviously, mortgage rates are going to be lower today, right? Well, we're going to get to that question in a minute. However, this is most likely going to lead to lower mortgage rates. What that means for you, if you are a potential homeowner, is your monthly mortgage payments are now going to be more affordable. So that $500,000 loan, for example, that you're going to take out, it's going to be about $150 cheaper per month, right? That's just on average. Next up here, that's going to lead to more buying power, right? So let's say you were comfortable with a $2,000 monthly mortgage payment, right? When these mortgage rates hopefully continue to keep coming down, that means, that $2,000 monthly mortgage payment, maybe it could have bought you a $300,000 home before. Now it'll be able to buy you like a $350,000 home, right? So now you just got more buying power, hopefully with these lower mortgage rates. And then finally, there's going to be more refinancing opportunities out there. Let's say you bought a home, especially within the past 2 years, right? Or maybe you bought a home 10 years ago and you kind of missed the refinance boat when rates were so low a few years ago. Hopefully, when we see these mortgage rates continue to steadily move down, there's going to be more and more chances for you to refinance if you do already own a home. And when I say refinance, we're talking about either taking cash out of your home or just straight up lowering your monthly mortgage payment. So this is really, really good news. All right, now I know what you're thinking, right? You're like, well, Christian, I was actually watching mortgage interest rates because I'm so savvy. And as soon as the federal funds rate got cut 50 basis points, mortgage rates did not do a thing. They stayed the absolute same. They stayed flat. And then actually mortgage rates actually continue to stay flat to this day. So if there was a 50 basis point reduction in rate, how come mortgage rates are the exact same that they were prior to this cut? Well, it's a very good question. And there's three reasons, and we're going to go into it right now, right? Number one, the federal funds rate is much different than your typical mortgage interest rate, right? So when you think about the federal funds rate, it is literally the overnight rate that banks charge each other to borrow money. So you're talking about an overnight or 24-hour rate, right? Which is the smallest rate you can think of. Now let's think about our standard typical 30-year fixed mortgage interest rate, right? 30 years. So you're comparing a 24-hour rate or an overnight rate to a 30-year fixed rate. Those things almost could not be more different, right? Now, what mortgage rates actually go off of or are more closely tied to than the federal funds rate is actually the 10-year T-bill, right? Now, let's go into number two because number two is the most important out of these three, right? That's about market expectations, right? Now, this rate cut was already expected. Investors priced in at least a 25 basis point cut, maybe a 50 basis point cut weeks ago. So weeks ago, we actually saw mortgage rates start to steadily decline, right? Because investors were planning on this rate cut to happen. So when Jerome Powell came out with the good news, it had already been priced into mortgage rates for weeks, right? That's probably most important. And then also, economic conditions play a huge factor in long-term or mortgage rates, right? So we're not just thinking about, again, the federal funds rate, which is the overnight rate that banks charge each other. We're thinking about other economic conditions like inflation. Ever heard of that one? Is your money going to be worth the same as it is right now, as opposed to 30 years from now after that mortgage is due? Of course it's not. Other things are job growth, overall economic stability, right? So that's really what's going into what is affecting mortgage interest rates. All right, now I know what you're thinking, right? Christian, you started this video off in such a good mood, in such high spirits, and then you basically told us that mortgage rates are not changed by the federal funds rate, right? Well, here's the main point, right? This is the main point. The future is looking good, right? So we've had our first interest rate reduction by the feds since I think 2020, right? And I think it was the biggest 50 basis point reduction since 2008. Usually we see a 25 basis point reduction. This one was 50, so it was a big cut. Now, why I think the future looks good is that markets, like we talked about before, they already priced in this cut. They, I guarantee, are now pricing in 2 more rate cuts before the spring, which is really good news. So if you're penciling in your calendar, the Fed meets again, I believe, in November, a day or two after the election, and then again in December. So we're going to have a really exciting winter here. All right, that is all she wrote. That is it about the federal funds rate getting cut by 50 basis points, which is awesome. If you did like this video and you think this video is awesome, I'd love it if you can give it a big thumbs up. Also, if you like the majority of my videos and you want to see what happens in November or December with the next rate cuts, please go ahead and subscribe to my channel. That actually helps me out a lot. And then most importantly, if you have a topic for another video, please leave it in the comments below. I would love to make that video. Other than that, any questions, mortgage related, real estate related, please feel free to reach out to me anytime. Call, text, email. Adios.